Welcome to the Banker Lamp. Please enjoy the video.
You begin by confirming eligibility and assembling essential documents so you can apply immediately. You should verify credit score and business history, then collect ID, recent tax returns, bank statements, and a concise loan purpose statement. Once done, pick a target loan amount and term that matches cash flow, calculate estimated monthly payment and required collateral. This prevents delays and underfunding. Make sure to upload clear, organized PDFs to speed approval, and enable the underwriting team to evaluate you quickly and accurately. You now move into underwriting. Stay responsive and precise so the process doesn't stall. Provide requested clarifications and supplemental documents within 48 hours. Explain any unusual transactions or seasonal revenue patterns to the underwriter. Once the platform returns an offer, carefully review APRA, origination fees, covenants, amortization schedule, and prepayment terms to understand total cost and operational constraints. If necessary, negotiate rate, adjust collateral, or request a conditional approval timeline. You complete the process by reviewing closing documents, signing electronically, and confirming the disbursement schedule so funds hit accounts when expected. Once signed, set up repayments via ACH or AutoPay and note the first payment date. Automate to avoid missed payments. If funding delays occur, immediately recheck the document checklist, verify ACH routing and account numbers, and contact support with timestamps. One key troubleshooting tip: if underwriting flags cash flow, provide a bank reconciliation and a short cash flow projection to clear concerns fast and secure funding.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.